We are very happy to invite this second day capacity building on skill enhancement program for on financial education for young investors. Today we are going in YouTube live stream. So participants, if you want to ask any details of anything, just post on the chat box in your YouTube screen. Don't make any glitches here. We welcome you, ma'am, Karthika ma'am, and we are happy to welcome Gayatri Joshi ma'am to be with us. Thank you, ma'am.
Thank you, ma'am.
And the session is handed over to Karthika ma'am.
Thank you, ma'am. So I wholeheartedly thank to the Rajapalayam Raju College to supporting and organizing this investment awareness program from the Bombay Stock Exchange. I thank to my training partner Gayatri Joshi madam from Bahandi. So he's keep on supporting us to doing these kind of the financial education workshop for the college student. So I hope my virtual screen setting is little bit it's not quality good, so please kindly take a few snapshots, madam. It's the beginning of the session. Once I started to share my screen, after that I change my setting. I would like to share screen. Yes. I hope my screen is visible to everyone. Yes. Yes, ma'am. What about this? The screen is visible?
Yes, ma'am. It is clear.
Yes, ma'am. Kindly take a snapshot.
Sure, ma'am. Okay.
Shall we move?
Yes, ma'am. Yes, ma'am.
Yes. Okay. So please give me a minute.
ఇది జిల్లనే ఉంది అది ప్రింట్ ఫోటోస్ ఉంటే ఊడలు కూడా పార్టిసిపెంట్స్ మన ఫేస్ ఇంట్లో అవైలబుల్ కొమ్మటిస్తుంది
పార్టిసిపెంట్స్ తో రారే
దిల్లదిలాదో మన స్ట్రాంగ్ అని వచ్చినట్టు
లేదు ಅದೆಲ್ಲ ತಗೊಂಡು ಅವನು ಪಾರ್ಟಿಸಿಪೆಂಟ್ಸ್ అనేవాళ్ళు ಹುಳುನ ಇಕ್ಕೊಂಡು ಬೋನ್ಸ್
Yes, madam. I shared the YouTube link with you. Yeah. Yes. I hope we will start the session. Very good morning to all the students. So it's an immense pleasure to me to address you today on this occasion. And this programs will help you to understand. So at the young age, what are the things you should learn about the stock market? So this program, once again, I will tell you that it will be provided by the Bombay Stock Exchange. So it will teach you about So at the young age, what are the things you should consider, okay, in terms of your investment? And if you want to start to earn the income, so that time you will, so this program will make you to understand how you can cut down unwanted expenses. So all about we will discuss. So I hope all you are the commerce background students. You might know noticed all the things. It's like investment and investment concepts. But here the things we are going to look at that what practically, okay, feel you to better in your life. Suppose if you have a good investment goal. So investment goal is very simple. Yes, you are just trying to utilize the available financial asset class in India. For example, fixed deposits, equities, mutual funds, gold. So all these instruments you have studied already. But here I bring you to that how these instrument is used to make you to live better healthy financial life. So that is what we are going to be addressed today. And one example I want to bring you the new tips. The person is living without investment objective. That means not knowing of investing your money into these kind of marketable asset class, and just keeping the just simply earn the income and this spend the money in their life. Definitely the person's life will waste. So we are equaling the person who's living without investment objective. The person is driving, okay, the or vehicle without knowing the destination, or the traveler, okay, doing making the journey without knowing the destination. So that is what the entire life will go waste if the person is living without investment objective. So investment objective is nothing but planning their financial need. For example, okay, need some money for buying the car, need some money for going or a vacation, or need some money for the hospital purpose. So saving that money for fulfilling that upcoming need, saving the money where to go and save. So in these kind of marketable asset classes. So that is what we will discuss about today. And why the people has to do investment. Okay, the big first of all, I just make you to understand investment is means it's not for only the rich people. The investment means it's not only for the people who know about financial market more. It's not like that. So many people, they are telling that I don't know nothing about finance, I don't know nothing about the commerce, so I'm not aware of all the marketable asset class. It's not a right way. So investment is it's possible by every people. The people are earning a lump sum, or it is like their basic level of income, whatever may be that income level is high or low, or it's like average. So whatever the income is the person is receiving, based upon their income, so we can design the investment plan. So why we have the person has to do investment. So to beat the inflation and save some money towards retirement, and definitely, okay, reduce that unplanned expenses, okay, like because all of a sudden going and buying some things without knowing, okay, had the proper plan, that is we are calling as unplanned expenses. So why? Because there is no proper investment goal. That is why that people committing the mistake of unplanned expenses, luxury spending. Okay, so the luxury items. So if I say for me it is iPhone itself, it's a luxury for me. So based upon each and every individual, so we can categorize what is luxury spending. Because simply going behind, okay, branded item, going behind buying the luxury product, so the money is simply wasting. That product and won't provide or services like go. So for going and having the food in the average hotel, and where the hotel is very neat and tiny, that's fine. The same thing going and having the food in the 5-star hotel, it makes a difference. The same food is served in both hotels, but what is the cost? it's a product. We also, what the food we are going and having at the 5-star hotel, it might be costlier than the normal hotel. So what is the money is simply going waste. It won't provide any return over the period of time. So to avoid unplanned expenses and luxury spending, so the investment and investment goal is need for everybody. Yes, each and every one, either they are earning the salary in the lakhs rupees month, or they are earning the salary, okay, few thousands in the month. Both people, okay, they should plan their investment. So what is that investment, how they can able to? So there is a mantra for the investment, okay. 30% of their 30% of their monthly income should be converted into investment. So that's for like an individual. They are earning the salary of like very basically at for young age, they are very precious, they are joining at the job. So the initial starting salary is 20,000. So in that 20,000, 30%, okay, like 6,000 rupees every month, okay, that 6,000 rupees to be invested, okay, that savings into converted as an investment through the various asset classes are available. So why this need? If not, what will happen? The entire 20,000, it will be go in the form of expenses, simply buying the stuffs, okay. So one should want to control the expenses, then they should go with the investment goal. What is that investment goal? So keep, okay, divide your available savings into different part, like, okay, 6,000 rupees. So in this case, the available savings amount is, so the income is 20,000. So we keep out as a savings is 6,000. Remaining available amount for the expenses is 14,000. So this 6,000 will be divided into many part. Part one must be they have saved in the bank account, and okay, part two they can go with the some retirement plan. So retirement plan like NPS or public provident fund, okay, like that they can go. And part three they can go with the mutual fund, and part four they can go with the shares. So like that they split that available saving amount, okay, investable amount into the different part, and parking that money into the different asset classes. So that is called as a investment, okay, investment goal. So if one is proper and very strict in every month towards their investment plan, definitely the expenses will reduced. So the reducing of the expenses, so based, okay, expenses is reduced, okay, only because of their proper plan about investment. If until they are not able to reduce the expenses, how much income they can it's come, it's not sufficient to save their money. At the end of the month, they, okay, what will happen? All the amount is spent in the form of it's various activities. So finally, if one person is moving their life without properly saving their money in the marketable asset classes for the long term period, then his debt will be more, okay, his savings is not there, okay, his money is not growing, he is spending a lot in each and every month. In future, what will there? So he will worry about the financial commitment, okay. So that should be avoided. One person should be concentrate on their investment plan. So this is a very easy step. I told how much income is earning by the individual. It's not a matter today, because how he is so much concentrated into towards investment. So first allocate some portion of the money for making an investment. What is left over after that, that money to be spent in the form of expenses, automatically the expenses will reduce. Yes. Next one, financial planning. Yes, I just the financial planning is very very mandatory for everyone. So I will just connect with the entire life activity with financial plan only. Why? So because there is a meaning behind it. What? So usually we will spend almost Okay, for educations, almost the people they spend 18 to 22 years on an average average for education. Okay, for on an average for education, why we are studying well, why we are, so for example, for get a good job, why we have to get a good job. Okay, to lead a decent and stable life, to lead a decent and stable, financially stable life, we need a good job, then only we will get good income, that means in the form of salary. So or the education for, okay, the people either they want, so okay, they will do their own business, so the basic is that education. So why they are doing the business, again they want to live a stable and happy life, so they want to generate the income, so they are doing the business. So almost the entire activity of the human is one another, it's so tied up with generating the income, so tied up with generating income. If the person is not good, okay, uh, to save the hard earned money, then what will happen? The entire life will go waste. So please be smart. The smart in the sense very specific, very, okay, specific, measurable, okay, achievable, realistic, and time bound. That is what we are speaking as smart. If I need a money, okay, it should be specific. Why I need a money? For example, okay, buying a car, for example, buying a car, why I need a money? So it's a, I need a money for buying a car. Is it measurable? Okay, how much lakhs I need for buying a car, what category of the car I am planning to buy. Then yes, if I suppose, okay, for example, the person is receiving the 20,000 of salary, planning to buy a car worth of 8 lakh rupees, is it achievable? Yes, it's achievable. Same, the monthly salary of the person is 20,000, but buying the car after it is like 20 plus lakhs worth, it's achievable and realistic. It's not at all. So please, based upon the income level, you fix your financial plan. That is matters lot. Then time bound, when it is need. Okay, is it immediately? So the guy who joined initially the job, it's like he started first month income, then buying the car all of a sudden. It's not at all good. There is a time bound. So plan. Okay, 3 years you accumulated some amount out of your savings, then put that amount for purchasing the car, remaining you can arrange from the loan and all, that's fine. So time bound, each and every financial goal you should reach or achieve, you should give the time bound. So all of a sudden it's making the plan and executing it, it leads to the okay, mental pressure, the you can't able to manage that much of all of a sudden of the expenses. So finally that will lead many people who are committing the suicide because of they are very poor in their financial plan. So that should not happen to the life, so we understand that smart plan. So it should be specific, it should be measurable. First of all, our financial commitment in our level, our capacity, okay, that is what it is, achievable and realistic. Then please fix the duration for everything, okay, to accumulate some money and put that money for fulfilling that financial goal. Yes, if one want to do a financial plan effectively, okay, so we should understand each and everybody. So each and every family, it has their own income and their own expenditure. So first understand, okay, understand the total income, okay, so income and expenses of the family. So based upon that, because all, see, we are like in family, each and everybody we dependent others, so it's like we are our income, our expenses, okay, it's not for only the sole purpose, only individual purpose. The income is benefited to the entire family, so that expenses of the entire family also beared by that family members. So that the financial planning should be for each family. So they have to understand their income and expenses. Then what are the future responsibility? Because today, okay, you have good income, salary, your bachelor life, you are running that. The down the line, your commitment, the need and responsibility is increased. So you have to plan the expenses for like that also. Then you have to keep the remaining amount for in the form of saving. So if you understand this concept of calculating the family income and calculating the family expenditure, then you can able to invest your money in the marketable asset classes for creating the wealth over the period of time. Yes, there are lot of investment opportunities are available. Okay, it's in India only the 10% of the people are invested into the mutual fund. Okay, less than 10% of the people are investing into the share market. The lot of new products, okay, it's coming in the market. So and a lot of opportunities are available. So for that, what we should do? So we should allocate every month, okay, 30% of our income into the different type of investment asset classes. So in over the period of time, so look at that, over the period of time, it will give, okay, it will provide a good accumulated amount that will help the individual to increase the standard of living. Okay, for example, today you are investing into 1 lakh rupees in the market. After 10 years, so you selected good companies. Okay, you today you put the 1 lakh rupees in the market. You just for one example. Okay, after 10 years, okay, it might be converted into 5 lakh. It's not a good return. So 5 times return over the 10 years of period. So if you know, if you deposit some money into banks, okay, as of now it's like very low interest. For 1 lakh rupees it will be doubled. It's take more than 9 years for doubling so doubling our investment amount in the banks because of low interest rate. It's the thing is, so if you select a good companies, blue chip companies, you are parking the money so in the various some shares that might be turned into the 5 lakh over the 10 years. So your investment amount will be grown in a multiple way based on the performance of the company over the period. So that will increase the standard of living in the over the period of time. So investment is mandatory to everybody. And after that, I just want to tell about the production. So how investment is need, so like that the production from the individuals and the family is need, that is fulfilled by going with the good insurance policy for the individual and the family members. So how the human the record 2 eyes for making a clear vision. So like that, it is the way for individual we need 2 eyes, that is investment and as well as insurance, so that the individual live the wealthy and stable financial life over the period of time. So today we will discuss the different asset classes which is available to, okay, invest your hard-earned money. So before that, I want to notice that one thing, what and all should be avoided. So what and all should be avoided. So these are the schemes should be avoided. So for example, there like jewelry scheme. The people are collecting the money like cheat funds, or like the people are collecting the money in the name of jewelry scheme, or the people are collecting the money in terms of some real estate scheme. So you will join other members so they can give the commission and promising, okay, please understand, promising unrealistic return. So promising the unrealistic return, okay, unrealistic return, we can't believe that return. So we know the FDs, what is the return, like 5.5%. Other fixed income securities like national savings certificate and all, it's like 7 point plus percentage. So mutual funds you can expect 15 to 20%. Shares you can accept 15 to 20% in a longer period. But the people will promising you double your money within short period of time. So if you are just giving them to 50,000 rupees, they promise you to provide, okay, 1 lakh rupees at the end of 2022. So like that, the promising providing the higher return, and okay, and doubling your investment with 1 year 2 year of period, then by advertising these kind of fraud financial scheme and collecting the money from the public, it's a illegal activity. Please guys understand that, because many people going behind and losing their money by like these kind of schemes. Okay, so they will come with a new marketing technology, and the person's trying to take a deposits. That means in that sense they are collecting the money. So please understand that who are eligible to person to collect the money from the public. The banks, we know they are RBI regulated and they have the license for taking the deposit from the public. And NBFCs, yes, they are not all NBFCs, okay, few NBFCs, they are got permissions for receiving the deposit from the public. And financial institutions, we know they are taking the deposit from the public. Apart from that, so and so companies are coming into the market and they are asking you to deposit in their schemes. So don't believe it. First of all, don't believe it. First of all, if they are providing the return which is unrealistic, it's not possible by the bank, it's not possible by the market, it is not possible by the mutual fund, means something is wrong with them. They are trying to cheat the people. So don't go behind this kind of Ponzi scheme and waste your money. Like to poor people, they are layman's, they are going with this kind of Ponzi scheme, that is a financial fraud scheme, and investing into the money that should be avoided. So this is what our main motto of them. We have to stop the people, okay, going behind these kind of market financial fraud schemes. In a newspaper, you take so many incidents are shared with that medias, like so and so places. So the two couples or like a group of people, they have collected the money and they cheated the fund. They are closed their offices and gone away. All the news we are reading that. Please, we should not go behind that. Yes. Next one is principles of wise investment. So first of all, the principles of wise investment means, okay, we have to do the fund. It's a logically save the money logically. That means we know, don't put all eggs into the same basket. I hope in commerce students you might already know that. Okay, what is mean by don't put all eggs into one basket. That means even the small amount, okay, you are saving, your savings will be savings will be happen. You have to save the money into the different market asset classes, not with a single one. So it's something will fixed income. Some asset classes will provide fixed income, like post office deposits, bank deposits, okay, you deposit in the bonds or like that. And the sum will, it's a variable income. So this variable income asset classes, you know, it's provide high growth, the capital appreciation will be there, risk also will be high. So one should save their money into the different market asset classes which provide fixed income and the variable income, so that their return will be so they are for that they are principal, and as well as they can able to get a good return over the money. So that is what you have to diversify the portfolio. So don't keep all your money into the single asset classes. That means in India, most favorable place to park their money is, we can say, bank deposits. Yes, almost the people will very fond, because the principal is safe. But when you take a return from the bank in your investment schemes in the bank, it's very low in terms of RD, in terms of FD. Okay, if it is a senior citizen, for FD they can get 6 to 7% of as of now present conditions, and the remaining people, so very less. So that we design our portfolio. And we can't be crowbody, and we can't be rich with a short span of time. Definitely it's not possible. So we should not be greedy. So we have the reasonable expectation, the return. Okay, expecting 15 to 20% of the return in the marketable asset classes, yes, it's a realistic, it's a possible. But getting seeking the huge return over the period of time, definitely it's not possible. Okay, so we have to wait and expect return over the period like 5 to 10 years of period. So it's that is a good, that is a reasonable. And don't borrow the money and invest it. Okay, keep investing your own money, that is always is good. So don't borrow, especially I'm telling that the people engage with intra day trading and borrow the money, and because getting a high profit in the short term period, they are thought of borrowing the money and putting the money and taking the quick profit. It's not at all happen. It's a one time they might achieve, but many times they lose the money in the market, so it's not a good. And do a regular investment, especially that is a very very good. Do a regular investment every month, as I told you, know the example from the first slide. It's like 30% of the monthly income should be invested into this kind of very regularly each and every month. And especially the other condition is we have to start in young age. That is a very important, not for the older period. Like after 30 you are thinking about the investment, definitely it's a waste. You have wasted 10 years. That is what by the time of 10 years, okay, you are invested money, it's a 2 to 3 times it's up. So the wasting of okay income uh, without investment in the early age, so it's the life is waste. So start to make the invest the money in the young age. That is very very important. Yes, yeah, this slide will make you to understand what is the difference of investing into other asset classes than the bank. So I'm not against to the this concept of savings bank account or thing. This is a need, it's a mandatory. So we have to park some amount, okay, for like safety purpose, like example 3 to 6 months, okay, a family expenses also be kept in the bank in the form of FD or the savings bank account, yes, for the emergency fund need. But no, the not need for keeping all our savings in the form of bank account, that will depreciate our money. So that is what this example is showing to do. So the someone is put the money into one in the SB account after 1 years after the return, okay, that is 4,000 rupees. No tax will be there up to the capital gain of 10,000. So we remove the tax purpose. So just we can just put it into the inflation is 5,000 means at the end of the year the value of the money is 99,000. So before a 1 year, somebody is keeping the 1 lakh there in the year account. After the 1 year from the bank, it's gone to 99,000. Is anybody accept? Yes, this is what happening, but people are not understanding indirectly, because so it's not your money value is not reduced by the bank, that is 99,000. Why we are just reducing that? Because of the goods and service values increased over the 1 year period, but your money value is not grown that much level because of lower interest rate from the banks. So this is what the impact happening in our money, okay, for keeping our all the money in the bank or in the form of FDs or some. So next one, all of you might notice that power of compounding. Yes, okay, the power of compounding in your curriculum. Okay. Now for the life, what is this power of compounding? Yes, the power of compounding, which will give higher return to the person who invest their money in the young age. So guys, the person who put their investment in the young age, okay, it's provide the huge return over the period of time. But the person who don't do that in the young age, he's started this kind of investment activity in the later period, so that time he will lose the opportunity of getting a high accumulated wealth because of this compounding. So look at that, the 25 years, the man doing investment every month 1,000 rupees up to the age of 60. What is the worth? 23 lakhs. The same thing is done by the person at the age of 40, and he is doing up to 60 years. So his worth or accumulated value is 5,92,000. So much difference. Okay, so much difference. So please understand that investment in the young age is a very, very mandatory. And also you look at that, the selecting the asset class which provide, okay, good return. Oh, that means it's a good return in the sense, like expecting 10% of the return, okay, and more than 10% of the return. So it's a good return means it's a based upon the taking nature. The person is ready to take more risk, then they can go with the asset class. They can go with the asset classes which provide a higher return, and also they will ready to take the high risk means. So like that. So selecting the product which good realistic return over the period of time, that will create a more value to your investment. So like the same example, if it is a 15 percentage, okay, if the person is selected the asset class which provide the 15 percentage of the rate of return, so what his investment, okay, he started at 25 at the age of 25 and keep on doing 10,000 rupees in the month, that will accumulated as a 1 crore. See, I'm not just feel greedy, or I'm not stimulating that greediness. Just it's a fact I'm sharing that yes, there are the asset classes which will provide more than 8% return, which will provide 15% rate of return also. So we will see the example. Okay, the NPS, National Pension System, it is introduced by the government of India in the year 2004. Suppose one should start to invest into the NPS. So this example will help you that. So how much is the accumulated value as per the concept of this compounding interest. Yes. So you look at that, the person is doing investment at the age of 25. Okay, he started to investing every month 2,000 rupees. He is repeating this investment every month up to the age of 55. That is the 30 years is the investment period. So expected rate of return, I just kept 9%, but from the scheme started from the, that means the year 2004, it's providing the return of more than 10%. But here for the calculation purpose, I just kept only 9%. So for that, the accumulated value is 36 lakhs. So the person, but only thing understand, NPS, you can't withdraw the money. It's as per your wish. You can able to withdraw the money at the age of retirement. That is once the person is reach 60. If not some medical emergency, so during the tenure, 3 times the amount, that is the particular NPS account holder is allowed to withdraw the money 3 times in the tenure of tenor of that NPS for the medical reason only. So at the end of the time, he will receive that 36 lakhs. It's a lump sum from the bank, or he or may keep that amount with the bank, or getting the 25,000 as a monthly pension. So in this example, the 80% of the accumulated value, that is 36 lakhs, is kept in the form in the bank. Okay, that 80% of the accumulated worth, okay, they will get a pension of 25%, okay, every month from their bank. So based upon the need, okay, for example, somebody they need 50,000 every month, okay, in the form of pension under the NPS. Then how much they have to invest? They have to invest every month 4,000 rupees. So like that, they determine what is the future need, how much they need in the future. So based upon that, they can keep the monthly contribution now itself. Then one can live a happy retirement life. But starting the investment should be at the age of 20-23, like that range. It will give good return over the period of time. Yes. So look at that. This graph. Yes, I'm just speaking about the graph of the Sensex. Okay, so there are so many myths are there in the market. That is misconcept. That myth number 1. Okay, so myth number 1. So many myths are there. So first myth number 1. So many people are telling stock market is gambling. So the 90% of the people will lose the money in the stock market. This is a myth number 1. Yes, the people are without logic without no the reason behind that. They are coming with the investment and randomly selecting the company and putting their money. There are the chances to invest. But as an educated one, okay, you should understand that how to select a good company, do the fundamental analysis, and keep the money for a longer period. Definitely, you can enjoy the return 15 plus percentage over the return over the period of time, because you can look at that the graph of the Sensex. Is it growing or not? Is it growing or not? Yes, it's growing. Yeah, what is the growth rate? The 17 percentage is the compound annual growth rate. Okay, okay, rate of PSC Sensex. So the index itself it's growing 17 percentage. What about the companies? Okay, it's which under the Nifty Sensex 30 companies. Definitely, their growth also it's very equivalent. So we can find a good company and park the money for the longer period to enjoy the 15 plus percentage of the return over the period. Yes, it's a possible. Okay, you yes, it's a possible. You just read a case of if someone is invested in 2000. I'm just speaking about like now 2020. Now we are in 2021. So somebody is invested into 2000 in IT sectors. It's a well-known companies of like Infosys, Wipro, all this. So these kind of IT companies. So please calculate the growth rate now. Definitely you will be feel amazing. And somebody invested 10 years back in Reliance. What is the growth rate now? You will be amazing that. So somebody is invested, okay. It's 2 years back in IRCTC, the Indian Railway, when they announced their IPO and came into the listing in the market. Now they enjoy 300% of the return over the period of time. So look at that. The lot of companies we can keep quote the return percentage, hundreds, thousands. Okay, so look, there are the sectors. Okay, they provide 30,000 percentage of the return first 10 years. Yeah, that will be there in our Indian market. So I'm not just telling anything. You just browse whatever and the content I'm sharing with you in the Google. You can able to see the fact of that return, the wonderful return given by the companies that is there. But find out the companies are difficult. So that what you do a fundamental analysis. For you guys, fundamental analysis is very very easy. So a lot of fintech companies like tradebrain.com, screener.in.com, so these .coms are there. It will give you a lot insight about how to select the financially strong companies. So to park your money. See, like every month, if you're planning to invest into 100 rupees in the shares, yes, it's a possible, because the shares worth like 5 rupees shares, 10 rupees shares, like 20 rupees, all range of shares are available in the market. So you can be able to invest your money in very small amount every month in the shares. So it's not too late. It's the right time. I'm addressing to the right person. Okay, to the people because you are young age. You think about investing into these kind of asset classes, which will be provide the stable financial life over the period of time. So I'm just coming to the concept of insurance. Okay, so as I told that today you should understand that how to apply the insurance policy and the claim process and all. So all these kind of details, so many fintechs companies are nowadays is a displaying that how to take an insurance, how to take a best insurance based upon your risk, whether you are planning to take term insurance or life, okay, medical policies or endowment plan or money back policies. So all these kind of details are available in the online like policybazaar.com and other websites which are showing that. Please read the scheme document before selecting the best insurance scheme for you and your family members. So that is my kind request, because most of the people in India, okay, they are selecting the policy in a wrong way because of wrong sale. That means what I tell, the policies are selected based upon their referral or agent or someone neighbors told something. So unless understanding the need of the policy or selecting the insurance policy for you and your family, you are just keeping wasting your money for in the form of insurance. So don't do that. Yes. So next, I would just speak about this Ayushman Bharat Yojana scheme. So kindly, guys, this is very useful scheme. Okay. So the Mediclaim policy introduced by the government of India. So kindly understand that. So what type of diseases or what type of surgery will done under this Ayushman Bharat Yojana, whether your family is eligible to this, to check eligible criteria. If then you can download the e-card for this Ayushman Bharat Yojana scheme and get clarity about. Okay, so Mira dot you have no, so there is a website called Mira dot yeah, this website only I'm just telling, Mira.pmg. So to browse in that, so which are the hospitals are empaneled in your district with this Mediclaim policy, that is medical insurance, to get a cashless treatment for more than 1,500 diseases. So every family is 5 lakh rupees per year, they can get a cashless treatment from this scheme. So for that you have to update yourself. Okay, first you check whether you are the eligible person for that, you have whether your family has the e-card for this card. If then you please check with the nearby hospitals which are the treatments are covered under that. Whenever is necessity is arised, please use this facility. And I tell, keep on every classes in my students and every batches, please take this Pradhan Mantri Suraksha Bima Yojana accidental insurance, which is provided by the central government with the worth of 12 rupees. Okay, per annum is the plan. For that, it's a 2 lakh rupees is the coverage. So you can able to take from your bank. Okay, and very useful with the lowest premium every year. This is a term insurance accidental policy. You should pay every year 12 rupees. Okay, then you are able to get a claim, either it is a death is happened or either it is a partial disability or full disability, like losing of eyesight or like hearing capacity, or it's a hand or leg or something, for a permanent disability happened due to the accident. For that the claim will be applicable. So next, the Jeevan Jyoti Bima Yojana. Yes, this is also it's available in your bank account. So this is for life insurance, for paying the premium of 330 rupees per year annual premium, for getting a 2 lakh rupees as a life coverage. So this is, if some death, normal death is happened, so this life insurance is applicable for accidental death, cause of the, irrespective of the cause of death, either it is a normal death or it is like it's accidental death. So this policy will provide the 2 lakh rupees claim to the family members. So it is very useful. And I'm just going for the next one is about fixed income investment. Yes, as I told that in our portfolio there should be a one part, okay, that is a fixed income securities. So this is a very that principal amount whatever we deposit in this kind of scheme, it's very safe and secured. So whatever the investment schemes are available, public provident fund where it is available, bank, okay, it is not a short-term investment, it's for a long-term investment. There is a login period in the public provident fund. Okay, so the return is like 7.1 plus percentage is the return. So every month rupees 500 rupees, yes, you can able to keep in the public provident fund. Okay, and national savings certificate, Kisan Vikas Patra, national certificate of deposits, yes. So multiples of hundreds, you can, if I like 500,000 rupees, you want to invest into this certificate, yes, it's a possible. Or you want to do RDs, yes, you can every month, okay, do it RD 500 rupees, yes, it's a possible. If it is a, please, if your amount is very small, if you are doing RD and all, okay, what to do, you can go assist to your post office, or you can just try with your mobile banking, because many people, they are the students community are very hesitant to go to the bank. They are feeling that their investment amount is very less, so they are hesitating. For example, they want to buy anything, like they want to keep RD like 500 rupees, which they are feeling very hesitant to go the bank and check about the scheme. So please tap to the post office. So for fixed income investments, the post office is the best place to you go. So you can inquire all the available schemes, and utilized these fixed income investment to make an investment of your savings, so that will provide security, okay, and it will be provide the stable income. Next, coming to the equity investment, yes, that is investing into the shares. So investment in the shares, yes, I told that yes, you can invest every month minimum amount 100 or less than 100 also, it's a possible. So for that, nowadays it's a very easy. You can able to open your demat account with free of cost. So nowadays is a demat account is opened with free of cost. Yes guys, you can able to open a demat account with free of cost. You can log in into your demat account and select the company, place the buying order. Yes, you can able to buy it. So but lot of risks are available. So I ask you to first read magazines, okay, regularly watch Money Control, ET Market, okay, that Economics Times. I'm just telling that Economics Times Market, business, that means Mint newspaper. Read market news first of all, and just try first initial stage. Try to predict the market trend. Okay, so before opening bell, before opening of the market, by based upon the news collection, so you predict the trend whether the today the market will bullish or bearish. So first predict the trend. Then after the second step, you select trying to select the good companies. Okay, good companies means based upon the financial analysis, ratio analysis. Okay, there is a, so you just visit tradebrain.com that teach you that the 8 fundamental ratio one should, as an investor, should understand, okay, before investing their money in long term. So like that, you just go and check these kind of fintech company website to select the company, fundamentally strong company. Then every month, like for example this month you are buying that say, so next month Nalco, so like that. So you feel whatever the you are identified that fundamentally strong companies, and keep your money into that kind of companies, that will give you over return. But it's a very risky, and selecting a good company for investment also, it's a difficult. So what to do? First you understand the market, when buy the companies very small in price range. Then in the future go with the companies which whenever your income is increased. So why I'm just suggesting, no, there are the companies, they are outperformed in the market. So look at that, these are the 10 so these are the sector, they provide 34,000 percentage of the return in the market past 10 years period. So find the good company in the pharma, find the good companies in the chemical industry, find the good companies in the footwear, find the pesticide companies, so consumer products. So these are all the sector, they provide 34,000 return. It's very amazing return. Yes, that has happened in our Indian market only. But the thing is, we should select the company under these category. That's very difficult. It won't happen all of a sudden and immediately. Step by step, you read the market news, read a market new related magazines. Okay, you know, in Tamil, Nanayam Vigidan is there. No, I hope all you might heard Nanayam Vigidan. Read it, Nanayam Vigidan, that investor, they can understand basic concept of investment from that magazine. So the down the line, you accumulated more knowledge, then you can start to invest. Yes, then mutual fund. The people who are not like good at in the financial market, they are very struggling to select a good company in the investment. Then let them come to the mutual fund. The mutual fund also, it's a provide the return like 15. Okay, return, please understand, 15, they can expect 15 to 20% of return in the SIBs. I'm just telling a systematic investment plan for the year 5 to 10 years. So the mutual fund is the best for beginners. So look at that, the in India, you know, 44 AMCs are there. So 44 AMCs are there. So you, the guys, students, you can open an account with any AMCs. Okay, it's according to your convenient, either SBI mutual fund, or it is Axis mutual fund, or it is ICICI Prudential mutual fund, or UTA, who are maybe the AMC company. Open it. Okay, just log in into your mutual fund account, and you select the fund based upon your need. So usually, okay, I will tell you that the three types of funds are there: equity fund and debt scheme and hybrid. Okay, these are the three type of equity, uh, debt and hybrid. So these are the basically, apart from that there are the schemes are there, they say, like sectorial fund. So equity means your collected amount is okay invested into the equity shares of the company. So who is collecting the money? Yes, AMCs are collecting the money from the investors, so then they are investing into the marketable asset classes. So equity schemes is a highly risky, but they provide the good growth over the period of time. Higher return, high risk, higher return equity scheme. Okay, low risk and low return in the debt scheme. Moderate risk and moderate return in the hybrid scheme. So in the young age people, let them go with the equity scheme, because you are starting with your investment at the age of 20, 25 and all. Please start with the SIB under the equity scheme. That will be provide a good return. The SIB means every month some considerable amount, like 500 rupees or 1000 rupees. You are investing into the SIB under the equity scheme. It will provide the return like 15% plus return over the period of time. So debt scheme, it will provide return, okay, 9 to 11% of the return you can expect. Under the hybrid, 12 to, okay, it's for 15% of the return we can expect under the hybrid scheme. So for the debt scheme, suitable for the people who are don't want to take a risk, they are worrying about their invested amount, then they can go with the debt scheme. So return is low, risk is also low. And the hybrid scheme, okay, the company, they can, one part of your pooled amount is invested into the equity shares, and one part is invested into the fixed income marketable asset classes. So that means that the equity scheme and debt scheme, both the combination will become under the hybrid scheme. So the guys, for the young investors, I always suggest for the go with the equity related mutual fund scheme, especially in the SIB, systematic investment plan. That will be provide a good return, okay, over the period of time. So here the mutual fund is the place. So you can indirectly invest in the stock through the mutual fund. You can indirectly invest in the bonds through the mutual fund by selecting the debt scheme. You can indirectly invest in the mutual fund. That is, you can invest the gold in the in the form of mutual fund. Yes, that is we can call ETF, exchange trade fund. Yeah, gold funds are trading in the okay, gold funds are trading in the market. Yes, you can able to purchase the gold related mutual fund, so which you will enjoy the return, how the physical gold price are moving. And real estate, if the people are not able to invest in the real estate directly because huge investment is need, yes, they can enjoy the okay, they can enjoy the return of the real estate by investing in the mutual fund. So please, if you have the time, go through there are two instruments which is recently introduced in India, RITs and INVITs. Okay, RITs and INVITs, and just as real estate investment trust and infrastructure investment trust. These two trusts are introduced their unit in the stock market very recently. So you just explore more the things and buy the units of RITs and INVITs for enjoying the return, okay, from the real estate investment. All this is possible through the mutual fund. So please, if you want to know more about mutual fund, please visit the AMPI website. Okay, www.ampindia.com website. You are just visit AMPI website. I'm just Association of Mutual Fund Industries. Okay, you from that AMPI website, you can be able to download the fact sheet, that is a written analysis, the and very like IPO, FPOs are there. Flow, that is new fund offers. You can able to find out that new fund offer details from the AMPI website. So a lot more information, and you want to know the who are the registered distributor to purchase the mutual fund. Yes, you can able to access that information from the AMPI website. all it is available. The only thing is you should understand the things. So now look at that one example. Okay, if somebody they are investing their money in the equity scheme, and especially in the form of systematic investment plan, that means keep on every month fixed period you are investing fixed amount in this kind of SIB. There is like suppose someone keeping a 500 rupees every month under the SIB, so that is expected return is 16% of that particular individual, and he is doing this investment for the 10 years of period. So what is that? His total invested amount is 60,000. The return is generated, okay, 88,000. So that so return is more than that 88,000 because of the longer time period and higher rate of return. So the accumulated value is 1,48,000. So like that, the one they can plan it. For example, if you want, if you need 5 lakh rupees after the 10 years of time period, yes, you can able to achieve that 5 lakh target by contributing the money. Okay, in these so in the like mutual fund or shares, you can just contribute like every month. It's a some considerable amount to reach your goal of 5 lakh rupees is need after the 10 years period. So please determine your future need and plan your investment goals today itself to get a good return. So this is yeah. So I already explained that the gold is a favorable investment asset classes, but buying the gold, it is not an okay. It is not an investment. We are buying the gold because of gifting somebody else or like that reason. It's fine. But anybody they are planning to buy the gold for the investment, please go with sovereign bonds that is available in the bank. Okay, sovereign gold bond available in the bank, or buy the gold in the form of mutual fund that is traded in the exchanges, so that they can, for one example here, for example, somebody are planning to accumulated some gold, okay, for their girl baby or the boy baby, who are maybe that. So in for buying the gold every month, it's 1 gram. It's for physical gold, it is not possible. What one can do, so let them do it based upon the need. Every month they purchase, okay, unit in the market. Okay, fine. If after the 10 years or after the 20 years, they can sell these um, gold mutual fund units. It's a market on the rate. Then they can take the invest. They can convert their investment into the cash. For that cash, they can buy the liquid, the physical gold in the market, and gift for their babies. That is the best idea, investing in the gold than in the physical. Yes. So based upon the individual investment goal, for example, the somebody they are not taking to very high risk. Okay, they are very conscious about their invest principal amount. Let them go with the bank savings account, or they can save their money in the public provident fund, or if they are mutual funds, let them take with the liquid oriented mutual fund. Or youngster like you people, you are planning to invest your money, please go with the gold, especially like it's a mutual e-gold, that is mutual fund and the sovereign bond like that, and invest into public, that is invest into the equity fund in terms of a mutual fund. And so if you are thinking that, consider these two, okay, REITs and inverts, so for investment avenues. So please explore more these two investment trust unit, and you people want to keep your money. Yes, it's a possible. For the young guys, your main expectation is the capital gain. Capital gain means what? Buying at lower price and selling in, okay, high price. So book a capital, okay, so get a capital gain over the period of time. So for that, you can select these kind of equity schemes in the mutual fund. You can directly invest into the shares, or you can buy the REITs in REITs like that asset classes in the market, or buy the gold in terms of e-gold like Nippon piece. One example we explained, gold bonds, you can buy it. So these are all the few of your investment goals and available marketable securities. So there are a lot of opportunities are there in the capital market. Okay, so the lot of people, their companies are hiring the uh, finance background students, commerce students, and management students. So all these companies are not coming for the campus placement, they are doing the direct recommend through their company's portal. So please visit that mutual fund company's website, investment banker website, and share broking company's website. In the career column, go to the especially career columns of these website, so you can able to find the opportunities, job opportunities in the capital market. If not, you can visit this website capitalmarket.com to know more job opportunities regarding the capital market. Lot many opportunities are there in the capital market. Okay, bank, okay, NBFCs, the investment banker, housing finance limited, mutual fund companies, all are recruiting that. But the thing is, you should keep on watch these companies website and if any current openings are matched with your profile, please update your resume. And finally, if anybody want to do a certification courses, kindly visit to the NISM website. Lot of certification courses are available in the stock market related modules, so and mutual fund modules. You can it's all self-explanatory. You can prepare yourself and pay the examination fees and take examination in nearby centers which is near to your locality. That is possible. So by this note, I would like to end this session. I thank you all the participants, okay, who are all part of this webinar. So I would like to come to the, so I request you all the participants to come to the chat box and raise your queries.
Thank you, Karthika ma'am.
Yes, ma'am.
It's really a knowledgeable session that you have shared many schemes and securities prevailing in securities market. Thank you so much. If anyone student can post their questions in the chat box so that we shall convey the question to a resource person.
Yes.
Students haven't posed any questions.
1 minute, ma'am. Ma'am, yes. So I kindly request all the participants, please post your question over here. Ma'am, if somebody is asked little confusion in ma'am, what about, is it my voice is overlapping?
No, ma'am. Yeah.
Ma'am, please, SIB, please convey the questions, ma'am.
We shall display this question, ma'am. Padmanabhan, roll number 19 SBC 06. Asked that he had a little confusion in the mutual funds SIP policy.
Ma'am, it's very easy. That's it's not much more complicated in the mutual fund SIB. SIB in the sense systematic investment plan. So every, like RDs, which is equal to RDs, I keep on every month, like small considerable amount of money is invested into these kind of SIB. That is usually it's a SIB. There is a login period is there, like 3 years login period is. That means you can't withdraw your amount before that in period. Every month investing some portion of your income into the SIB, which will provide a good return over the period of time. That is what we are calling systematic investment plan. It's not a one-time investing and waiting for that return. It's like every like RDs, every month the investment should be done. Any other question, ma'am?
Ma'am, I have a doubt in SIP, ma'am.
Yes, ma'am.
Ma'am, what are the components that we can invest? Can we make a combo like equities, debt, and fixed deposit oriented schemes and all? Or what kind of composition can I make through it?
Ma'am, like you can index fund, you have SIPs. Okay. In equities also, yeah, just I'm classifying equities. You can go with equities, blue chip funds are there. Okay, flexi cap funds are there that you can select SIB. So equity schemes in the sense you are your amount is invested into the equity shares of the different company. That is what equity. Under the equity schemes, we have lot of types out there. In that type, so based upon, for example, you are taking index fund, Nifty fund in the mutual fund, Nifty index fund. In that, you can select SIB. That is possible.
Okay, ma'am. Thank you. Thanks a lot.
Ma'am, one more question he had asked that for the long term, is it possible in mutual fund like that?
Yeah, definitely it's a long term is possible. See, it's in short term, market is volatile. If you are expecting the short term return, it's very difficult in the market. So keeping minimum 3 years. That is what many schemes you can see. Login period is 3 years. That means you are keeping the money into that particular scheme. You should wait for withdrawing your investment. It's like 3 years. So a few schemes they have login period itself 3 years. That means you can't withdraw your investment for 3 years of the time period. So long term is the good. Either mutual funds, you are selecting the mid cap companies and investing your money. Wait for long term period to enjoy the good return.
Thank you.
Thank you.
Ma'am, I need a clarification for about tomorrow program.
Yes, ma'am.
Is it as per planned? Is it, ma'am?
I didn't get you, ma'am.
As per our plan earlier, shall we make arrangement likewise, or is there any changes for tomorrow program?
No changes, ma'am. No changes. No, no changes into anything else in the tomorrow. So this is as per plan.
Okay, okay, thank you, ma'am.
Yes, ma'am. Ma'am, shall we any more further question, or shall we end?
We shall end, ma'am. No more questions.
Okay.
We have.
Yes, ma'am. Yeah, because it's today we are on first. I'm not expected this live streaming of and all, because it's a very new to us, like my side and the Gayatri Joshi ma'am side. So anyway, I thank all the coordinators. They are helped me to come to this live stream properly and just interact with you all the students. And thank you all the team members from Commerce Department, Rajapalayam Raju College, and my whole heart thanks to the students. They are keep on supporting and being with our live streams. Thank you, ma'am. Thank you once again.
Ma'am, we have to thank you that in spite of many glitches, you have been tolerated everything, and today program gone well, ma'am. Thank you so much.
Yes, ma'am. Thank you, ma'am. Thank you.
Ma'am, is there any problem in recording that is to monitor by BSc, ma'am?
I don't know, ma'am. After that, I have to call for the madam and I have to check with the. I hope she is done that. Okay, I will talk after that personally. Okay. Okay.
But
Just
in the earlier itself.
ma'am, please end the live. So we are just discussing personally why this YouTube live.
Okay, ma'am. We shall end the program and
Yes, ma'am. Yeah.
meet you tomorrow, ma'am. Bye.
Thank you, ma'am. Thank you.
Thank you.